Mic check, mic check. What's going on, everyone? If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. In today's session, we are going to be taking a look about what happens next, specifically what Bitcoin's reaction should be here as now that the debt ceiling has been resolved. And we are looking at the US Treasury entering the market. They're looking to raise money to rebuild their cash balance. Quantitative tightening, the Fed is currently not debasing the currency. The opposite is happening. They're pulling away liquidity. Last time this happened was 2019. We looked at quantitative tightening was running. The US Treasury went into the market to raise its cash balance. And that's when the repo market broke. The Fed had to turn on the printers September 2019. Equities began a massive run up. We're going to look at what's happening right now, and we're going to go do our best to put it all together. We're going to come back to this chart of Bitcoin in 1 second so that we can lean into the technicals. Jordan, focus on the technicals. So we're gonna take a look not only at the macro, but we're gonna make sure at the end of the day to make sure we understand where we are in relation to price action, because at the end of the day, you have to follow price. We're going to be looking, or I want you to focus on this over here. This is a cause for concern when you see this type of price action, only if it rolls over. Now, a lot of people right now, you've seen recently a lot of people talking about the coming liquidity crunch. I don't know that that's going to happen. Okay, so we're going to look at this from a balanced approach. If you enjoy anything that you learned during this session, please go ahead and hit the thumbs up. If you're not yet subscribed to the channel, go ahead and do so. Hit the bell icon. If you remember, it was 5 months ago when we talked about bull market breakout. I feel like I could talk about these things now, because off the bottom here, we started talking about what the bull market breakout would be. That was actually December the 9th. Price over here, you could see, was just looking to get above what I deemed the previous cycle ceiling. If you watch this video, you'll find out why. Now, what ended up happening, prices actually bumped up above, came back below, which caused us to go from long bull market breakout, potentially beginning here, to back on the sell side. And then a couple of weeks later, again, piercing and closing above the previous cycle ceiling. If you watch this video, it is a really good one. And the point being is that we tend to be a little bit of ahead. And that's good. We want to be ahead, but we want to make sure that we keep it balanced. And there are a lot of expectations by the end of the year that Bitcoin will be doing some massive things, even potentially new all-time highs. And not sure that I see that. Well, I don't see that. It could happen. And if it's happening, I want to make sure that I'm there, which is why we're going to be looking at this current pullback, and we're going to detail where it would be resuming back up. If you remember, it was just a couple of days. It was on April the 10th. We put out that likely one of these is wrong. And last time it was Bitcoin. 2 days later, Bitcoin topped out, and since then has been pulling back. Is that pullback now about to come to an end? Is the catalyst the debt ceiling being resolved? Is the catalyst, if you've seen what happened overnight, that China is talking about new stimulus measures? We follow global liquidity both ways, and it's been coming off this past month. But if China does go ahead and look to prop up their housing market and add stimulus, we have to wonder what that's going to do. Again, we'll be looking for any type of upside breakout if it's going to occur. So this is a bit of caution. By the way, there are a couple of things that are a little bit different. If you looked at the move off of the low, December 2018 into June, right? Roughly 200 days, it was up. Now, I think if I come to a candle, right, it's going to see a little bit higher, but it was roughly 350%. And if you look at what happened off the low, November instead of December this time, and you were into June now, and that's up 100%, roughly 200 days again. And you could see that that's not the same. This move was more aggressive, right? Now, maybe it's simply, well, we're looking at diminishing volatility. We've seen, obviously, on the upside, significant diminishing volatility. I don't think many people expected many. There were some 69,000 Bitcoin as being the top, but I think many people did not also have the expectations that there were people out there selling Bitcoin they didn't have, like FTX and a whole host of others. Nevertheless, whatever happens is what happens. And so I could say that, well, we know on the way down also, well, we haven't come off 85% like previous cycles. We came off, what was it, 75% or so. So we're seeing diminishing volatility. And here again, perhaps we're seeing diminishing volatility, or as a lot of people think, well, maybe this time is different. And we're like looking by the end of this year, 2023, for an epic melt up, not just in Bitcoin, but across risk assets. And then that is setting up for a massive implosion. I mean, look, that could happen. A lot of people like ideas like that, ideas that are like sensational. I don't know that that's going to happen. And likely the base case and maybe the most probable is just like in this area, we set off onto a long accumulation zone. That would be the best case scenario, that through 2024 here, we enter into a nice accumulation zone, because it gives you and me and everyone else more time to continue to stack and build a position. Now, that might not happen. We actually might roll over. A lot of people talk that the low is in. I don't know. People say, well, what could take out the low? We saw a massive implosion. We saw FTX, $8-9 billion scam go under. And what could happen in the market that could then cause us or price to go even lower? And I just point to what could happen during maybe some type of credit event. Now, it seems right now that there's still ample liquidity out there. We have seen recently some banks go under, right? We did see the US banking crisis. And again, this is where the Fed stepped in and backstopped it. And you saw risk act appropriate. I mean, was that the risk event of this tightening cycle? Most people don't think so. Most people don't think that the Fed is done tightening. Right now, the markets are pricing in actually a pause coming in June. That was after communication this week, and this is including after the massive strong beat in the jobs market. Markets still pricing in a pause because of the communication directly from the Fed, as well as Jamie Dimon. He's kind of communicating as well that same message, that likely they're getting ready for a pause, but that won't be it, that they will be looking to hike further. And right now, July is actually pricing in a 50% chance of a 25 basis point hike. I think that, and I embrace that, that's likely the what's going to happen, is that we're going to see a pause in June. And then likely after that, we still have some more hikes to come. Now, will another bank blow up if they continue to hike rates? That's also expectations, and something like that, again, could cause an immediate expansion of the Fed's balance sheet. The last time the Fed expanded their balance sheet, if you come with me back to this area over here, it was September 2019. In this area right over here, the Fed began quantitative easing, expanding their balance sheet after the reverse repo market broke. And Bitcoin here, I mean, it didn't act like equities. Equities melted up to new all-time highs on this move, but equities also, by this point in June, had already made new all-time highs as well. So at this particular point in cycle, you have to wonder, where is more capital being allocated? Is it into Bitcoin and crypto, or is it into tech and the equity markets? And right now, obviously, we see over here that the move that we've seen in tech has been quite aggressive, and that's being fueled by the AI narrative. But nevertheless, we are seeing more money going to tech. I would not be as surprised to see equity markets make new all-time highs this year than I would for Bitcoin. I would be very surprised if Bitcoin were to do that. Nevertheless, it could happen. We will be watching for it, and specifically, we'll be watching right now if we could resume out of this pullback, right? So let's take a look further at what's going on. And let me start off over here and make sure that some good news, though, by the way, and this is going to be brief, but it looks like Ethereum here coming into this area of resistance, a confluence of resistance. So you can see this line I'm highlighting right now, right? That's resistance above. And then we have this sloping down resistance right over here. If price is able to break above that, it looks like Ethereum is resuming out of its pullback. If Ethereum is resuming out of its pullback, that's usually a good sign. When we see risk running, we like to see Ethereum actually outperforming Bitcoin. Now, I know this point of cycle, usually what happens is that we see Bitcoin outperforming on a relative basis. And we've largely seen that ever since going into the Shanghai update and throughout 2023, and why Ethereum generally outperforms in volatility. Bitcoin is, I mean, they're almost neck and neck, but Bitcoin has the edge over here. But this time is also different in so much as that when you go back and we look at what happened during the bear market in this place, by this point in time, the outperformance of Ethereum caught up to Bitcoin. This bottom, if this is indeed the bottom, we did not see that. And actually there's been and there remains a space. And also of note, it was Ethereum that bottomed in June, right? We didn't saw Bitcoin bottoming here in November. So there are a few different differences. What I'm getting at over here, if we see risk running over here, if we look at the next leg up and this pullback coming into an end in Bitcoin, seeing Ethereum coming out of here sharp, that would be a good sign for the overall markets that maybe we have the potential here to put in a new yearly high for Bitcoin, and likely targeting 34,000 as our first area of resistance. If we get the breakout over here, we'll look deeper in that in sessions to come. I just want to point out over here that good sign here if Ethereum is able to make that breakout. Here's a look at Bitcoin, and you can see that Bitcoin coming out of its pullback, it's still got a little ways to go. It's currently, resistance above. Even over here, I would say that this needs to break out above here. Currently somewhere around 28,200, right? So, same spot we've been looking for a while. If that were to happen, that would be a good sign that we're looking. It's still in jeopardy, a close below this line. You can see that nice little pendant right there that I'm highlighting. And at that point, the best case scenario is going to be that we see that strong support or the support over at 25,000 hold. I don't know that would be the case. I would be looking actually for this line to hold. Just they're coming in right around each other. We'll call it between 24 and 25,000. If that did not happen, if we broke down further from there, at that point in time, this is going to be where the bulls need to make a stand. If the bulls were not able to hold that, at that point, we could be running into a little bit of trouble. Shortly after putting out the bull market breakout prediction, and then talking about a confirmation occurring over here, the underbelly. And I said in previous cycles when we had the underbelly breakouts, that has been the low. The low has been in. And it was pointed out that, you know what? Well, we could see something different happen, and we could see something like this rally and then this breakdown. And regardless of what the price projections are down over here, or even on the upside, that's all irrelevant. It is true. Something like that could happen if we do break down from over here, which is why I just want you to focus on this highlighted green level below that I'm highlighting. If that were to break, the bull market breakout has been nullified and we are under pressure. Just be ready for anything. Just don't think about the upside. Think about what could happen. And by the way, that was talked about at the exact same time, right? Instead of trying, this is January 21st, instead of trying to project what price action you think may occur, position around what is occurring, which is why on the breakout, we took the breakouts and we've been able to hold them continuously. At the same time, if you get a breakdown, and if you get a breakdown of that bull market, you have to be able to make sure that you manage your risk. And that means making sure that you put yourself back into a position of strength because you don't know where, if the low is retested, whether or not it's going to hold. And if it doesn't hold, by the way, I mean, we don't need to talk about it today, but we could be looking at some significant downside. And I want to make sure that if that were happening, that everyone were ready for it. And listen, at the time I put out this video over here in December 9th, when Bitcoin was trading at 17,000, no one wanted to hear it. No one, I mean, obviously CTM was all about it because they understood what we were doing and how we were doing it and why we were doing. But at the same time, no, like the rest of the crowd out there was mega bearish, looking for, an immediate test of the lows and making new lower lows. So if you hear me talking about things that you don't like, you don't have to agree with it, but you could use it to firm up your own opinion or actually see things in a different light. If you haven't had a chance yet to hit the like button, please go ahead and do that. Ace, we're seeing Ethereum, Bitcoin breaking out to the upside. Again, that could be really good for a potential move to the upside. John, if we make it past 38, 33, 34,000, if we make it past this area over here, assuming we were able to resume out over here, and then that resumption takes place, if we're able to break 33, 34,000, then in that area of 38,000 is where we would be looking afterwards. And that's coming off of some horizontal resistance in this area that I'm pointing out right now. Again, we have to first get the breakout. If we get the breakout to occur, at that point in time, we'll be looking at what's next and take it as it comes. Now, we were pretty early on this. Right now, you've heard a lot of people making the rounds, explaining the concern about the US Treasury coming in after the debt ceiling's announced for those new issuances. And if you go back, we did this work over here. This is coming off of, just trying to see, March 30th. And we were looking at what could potentially be happening over here, the coming liquidity crunch. And at this point, we were looking at, I look around and everyone is mega bullish now on equities. They weren't down over here. At this particular time in March, I inverted this chart of the NASDAQ to show you that if we broke above this purple line, everyone was like bearish. And I was showing them, is this bullish or bearish? The chart was inverted. And everyone agreed. If the line broke, it's mega bullish, right? Again, you got to go against the current sometimes. When we talk about sell in May and go away, that is because of June, by the way. June is seasonalities do not favor equity markets over here. And you could see, and we could look back and would say even during Bitcoin and looking at Bitcoin cycles, it was June over here that we peaked out and then went into that long accumulation right before the halving. And it looks like that maybe we are once again, this time a little bit earlier, but we're getting into June. What's going to happen? That's the question that we need to talk about and look about. And being at someone who was looking at this early, right, back in March, I want to just give my opinion now that we've reached the next phase. And we are looking by the end of June. By the end of June, the Treasury expects to borrow $726 billion. These are not small numbers. This is large numbers. Don't forget, going back into 2023, I was making the case that the US Treasury would be nullifying quantitative tightening. And we have seen risk really respond well to that. At this point in time, though, that is changing. Not only is the US Treasury no longer nullifying quantitative tightening, which means quantitative tightening are going to have further stress effects on the market, specifically the credit markets. Watch out, if credit breaks, that is much bigger deal than FTX going under. And by the end of June, their cash balance right now, which is $38 billion, is expected to be $550 billion. That's not the end. That's a lot for the next 30 days. That's a lot of money that needs to be issued. And then throughout the summer and into the fall, remember I've always said, this was the YouTube description for the first quarter of 2023. And it talked about right now the US Treasury adding extraordinary measures, nullifying quantitative tightening. My concern comes for the second half of 2023. We're now towards that pivotal point of the second half, but It's not that simple. It's not that all of a sudden the US Treasury is entering the market and it's going to be doom and gloom. Why do I say that? Let's look at that. First, let me talk about by July through September, they plan to raise another 733, so $1.4 trillion and have $600 billion by the end of September. You have to watch the repo market. Right now is massively different in 2019 when we saw the repo market break in September. In September 2019, right here in August, right before September, we saw the US Treasury enter the market once again after the debt ceiling was resolved and go ahead and raise their cash balance. And it broke the overnight repo market rate. And then the Fed had to come in and restart the printers, balance sheet expansion. It helped risk. Most of that money went into equities, not into Bitcoin at that particular time, but it was supportive of risk. Right now, there are people out there who are worried that, well, here we go again. US Treasury getting ready to raise their cash balance. Repo market's going to break. And you could look at this chart and see one mega difference. Look at the money that's parked right now overnight in the repo market, reverse repo market. It's $2.2 trillion. Over here it was next to zero. It was next to zero, close enough, right? What's a couple of $billion? It's a lot less than $2.2 trillion. If, watch this in the coming weeks ahead, if we start seeing the new issuances for the Treasury come out of the reverse repo market, so we see this balance start to come off, that would be net neutral for the market. That would just mean money that's parked on the sidelines over here in the reverse repo market, collecting massive interest. At that point in time, if we saw that going down, that's not going to be straining the liquidity of the market. So again, just because the Treasury is going into action over here and now reverse of what's been happening, it doesn't mean that all of a sudden markets are going to be under massive pressure. You have to follow the price action. We have to follow what's going on, and that includes what's happening here in the reverse repo market. China also, again, if China begins to get out on the bid and starts to add stimulus to their economy, that's going to be supportive of global liquidity. Remember, in talking about global liquidity, it was over here in this area that we pointed to that, well, it started to come off. Now, we saw equities continue a massive move up and a melt up, no stopping it. Other people, they do view liquidity differently. Look, it's not always black and white, not exactly sure what's happening. Bitcoin definitely here has been into a correction. Hopefully we could get it out. All right, let me move over to here. This is figuring out money. And he's showing the power of time and compounding. Instead of focusing on quick returns, focus on protecting capital. Now, here looking here for a massive return, right? Do you know that 2% a month is 24% a year? 24% a year. And he makes the case that if you start with $500 and you're able to do this for 15 years at a 24% yearly return, which is just 2% a month, you know, I say that, Joe, that's not easy to do. And then you're looking at adding $50 here monthly. You could see that total here, you have $9,500, and that could grow into $63,000. We like to look at that. Let me look at that a little bit different here. Let me show you with that same $500, adding that $50 monthly and doing it for the same time period. But look at that with a 50% yearly rate, right? Which is double the rate that he's looking for, 24%, 2% a month. This is 4% a month, 50% a year. Look at that massive difference over here at the end of 15 years. 63,000, 64,000 compared to 876. By the way, what happens if you were to put in $500 monthly? Right? Now, how do you get this return? I'm telling you 2% a month is quite a lofty return. Forget 24% a year. How do you do that? 2% a month. You know, look, this is Bitcoin. And you can see in the greens are positive months. And in the red are negative months. And you can see in the total column for the year, though, well, it looks like we're reaching that 24%, goal. Actually, it looks like we're reaching that 50% goal. But do notice that 2% a month, that's very difficult to do. That type of consistency is, I'm going to say, almost unheard of or impossible. Instead of trying, like if you're trying to think long term and you're trying to think of 24% a year, that does not mean throughout the course of the year that on a weekly or monthly basis that you're going to be profitable. Set yourself up for success. Do not set yourself up for failure. And that is a roadmap to get there. Now, Ethereum's a lot different. Again, a lot of the same in so much as that, well, far from every month is profitable, but the returns here you can see are excessive to Bitcoin. And that's because the volatility of Ethereum is greater than Bitcoin. And don't forget, I mean, or I should say that this is enough to get it done. When I talk about getting it done, I'm not talking about that 24% a year. I'm talking about that lofty goal of 50%. That's only $500, starting with $500. What happens if you're starting with $5,000 and you're thinking long term? What happens if you're adding $500 a month to that? What's your plan and how you're getting there is very important. And it's very important as you continue on your course to all the time make sure that you know your surroundings, where you are, that you're on pace to get where you need to go. By the way, we've had in Bitcoin 2 negative months in a row. I mean, that's very common, as well are 3. But usually when you see that type of consolidation occurring in the markets, it does lead to expansion. You can see right now that we have been consolidating here in Bitcoin for the last 2 months. Consolidation usually begets expansion. Will it be to the upside or will it be to the downside? We'll make sure we're prepared for either which one. CTM 2.0 right now on the sidelines, whether it's Ethereum, Bitcoin, and Cardano. Bitcoin and Cardano in the last 4 weeks have only had one trade. Throughout this consolidation out of the market protected. You might be asking, why is Ethereum on the sidelines? We took a position over here that stopped out. And since with both deviations positive above the 0 line, we have not yet had any entry. If you go into the Discord inside the Nuggets channel, you'll find the nugget that is the second message from the top. And there's a bunch of nuggets provided by MD, clips that are highly valuable and useful. And it talks about the CTM filter and what it's doing and why it is actually not yet entering the market. We will need some follow through. That follow through will include a breakout as we've seen over here. If we're getting that breakout, CTM 2.0 would be taking us back into the market. And look how nice this was, though. On the breakout above here, it did take us in, but that was not the trade. You have to be thinking for the long term. FNGU has been an absolute monster, currently into another position, 6% on the year, 6% in this open trade. What is it for the year? At this point, we get a little bit ridiculous, but let me pull it up while we're talking about it. 171% on the year, holding another position, 6% into profit. If you see the potential diversification, not only between Ethereum and Bitcoin, and Cardano, but also adding in stocks, you're looking here at why it appears that you're constantly making new all-time highs on your account. You're far from it. Look at Ethereum as a perfect example. If I show you this, and let me just start back in here in 2016, and you're like, that's up and to the right. It's just the account balance continues to grow. And you could look at the return during that period. That's from 2016. The volatility in 2016 was of magnitude. If you just go from 2017 to present, you can see the drawdown over here has been quite attractive. Yes, that is 9 million%. Notice the win percentage. 6 out of every 10 trades are expected to stop out at a loss. Hold your winners, push your winners, keep your losers short. There's no question about that. But the point here to make, or that I want to make, is that most of the time, you're not making new account highs. If you're looking to make 2% a month, if you're looking to make 10% a month, or whatever you're looking to make, understand that setting yourself up for that type of performance is really difficult to do because the markets are not usually conducive to whatever strategy you're trading. If you're trading a mean reversion and you're going through, or a range bound strategy, that's going to work well while price is ranging, but then it moves from that range to expansion. That's where your strategy is going to suffer. Vice versa, if you're following any type of momentum strategy during that consolidation, you're going to suffer. You're close to break even, small losses, running sideways, as I call it. That means the account balance here is running sideways, but the account balance in green is in drawdown or fluttering back and forth. And if you see, most of the time is spent like that, the mega moves up are a lot less. You've heard the old adage that markets spend 80% time consolidating and 20% of the time expanding. You could see that over here on the P&L. You could see it over here on the P&L. All right, everyone. That's it for our Friday session. I want everyone to know that as we enter this next phase over here, which is the US Treasury now entering the market to build up their cash balance, it's not black or white what type of effect that is going to have on the market. I am extremely interested to see the market's reaction. Not only this meeting, June 14th, if the Fed pauses, but when the Fed finishes tightening, which does not look like, remember just very recently, the market's expectations that we were going to be seeing cuts towards the end of the year, 75 basis points of cuts. That's no longer the case. We were talking about the markets first were priced too tight, then they were priced too loose. Now, how are they priced? I would say appropriate. I'm going to go with appropriate. The markets are likely going to see a pause, but that might not be the end of the hiking cycle. I would not be surprised to see further hikes. And then when we finally get to a pause, I am really interested to see how the market reacts. Does the market take that as a sign that it has the opportunity to extend a rally or not? That's going to be a big tell. I don't know when we could expect a pause. So I wonder if June's meeting, if we see a pause, an open-ended pause, meaning that they're probably returning, what the market's initial reaction to that is. That might give us a bit of a tell for what it'll be once we finally do reach a pause. Again, we know that the job market is a lagging indicator, right? And that's why people usually think that the Fed is behind the curve. How much lagging is it going to be as we move towards that pause? Is that when the job market is going to begin falling out? If it does, what are the market's response? It takes a lot of work to stay on the right side. And a lot of people like to take it down to a simplicity. Oh, Bitcoin is going to make before 2024, in 2023, new all-time highs, and then it's going to crash. Why? And where were you? Right? Where were you when we were talking about Bitcoin things and bull market breakouts? Anyway, thanks for being here today, everyone. I hope you all have an enjoyable weekend. And thanks, ID. I appreciate that very much. Javier, nice to see you. And everyone, I will see you all next week. Again, if you get the chance on your way out, especially if you're watching this on the mobile and you haven't had a chance yet, do hit the thumbs up. It really does help the channel, and I appreciate it. God bless you, everyone. I'll talk to you later.